Have you ever wondered why gold and silver, ancient relics of commerce, still command attention in our digital, fiat-driven economy? Many perceive them as mere historical curiosities, yet their presence in financial discussions, central bank reserves, and investment portfolios remains undeniable. This video will analytically dissect their contemporary significance, moving beyond nostalgia to reveal their true conceptual and economic functions today. In this video, we're going to explain what gold and silver represent in a fiat monetary system. This isn't about advocating for a return to past systems or criticizing modern money. Instead, it's an objective exploration of the unique role precious metals play within a world where currency is no longer directly backed by physical commodities. Gold and silver are frequently discussed alongside critical economic concepts like inflation, currency stability, and monetary policy. Yet, many investors, economists, and the general public remain unclear about why these metals still matter when money is no longer convertible into them. Understanding their modern role is crucial for separating historical relevance from unrealistic expectations, offering a clearer lens for investment analysis and economic commentary. In this video, we are not going to argue for or against the efficacy of fiat money. We will not predict future monetary outcomes or endorse specific investment strategies. Our purpose is purely educational, to explain what gold and silver represent conceptually and historically within the prevailing fiat system, providing a robust framework for monetary understanding. We'll begin by precisely defining what fiat money is and how it operates in the global economy. Then, we'll explain how gold and silver's role fundamentally changed after their direct monetary backing ended. Finally, we'll clarify what these metals represent and, crucially, what they do not in today's complex financial landscape. The goal here is understanding, not persuasion. We aim to provide an informative, educational, and analytical perspective that empowers you to form your own informed conclusions about these fascinating assets. This is about enhancing your monetary literacy, not dictating your financial decisions. A fiat monetary system is one in which money derives its value from government decree, widespread acceptance, and collective trust, rather than from intrinsic value or direct convertibility into a physical commodity. Unlike historical commodity-backed currencies, fiat money is not constrained by the supply of a precious metal. Its value is maintained by the public's confidence in the issuing authority and its legal tender status. Modern currencies function effectively because governments recognize them as legal tender for all debts, public and private. Financial institutions support their use through banking systems, and people trust they will be accepted for transactions tomorrow, just as they are today. This system prioritizes flexibility and responsiveness, allowing central banks to manage economic cycles through monetary policy tools like interest rates and quantitative easing, unencumbered by physical constraints. When fiat systems progressively replaced metal-backed currencies, particularly after the collapse of the Bretton Woods system in 1971, gold and silver ceased functioning as direct money. They were no longer units of account, meaning prices were no longer quoted in terms of gold or silver. Furthermore, they were no longer required for international settlement in the same direct manner. This demonetization marked a pivotal moment, transforming their role from active currency to something more nuanced. While they lost their direct monetary function, they did not become irrelevant. Instead, their utility shifted, evolving into assets with distinct characteristics within the new monetary paradigm. This transition is critical for understanding their contemporary value proposition. In a fiat world, gold and silver function primarily as reference points rather than active monetary mechanisms. They offer a unique form of historical continuity, providing a tangible link to millennia of economic history. This perspective allows us to compare value across different monetary regimes and evaluate the purchasing power of fiat currencies over extended periods. They do not directly manage monetary policy or control the money supply. Those functions are now the domain of central banks. Instead, they exist alongside the fiat system, offering an independent benchmark. For investors and analysts, this reference function provides a crucial lens through which to assess the stability and long-term trends of modern currencies, acting as a historical anchor in an ever-evolving financial landscape. Gold, in particular, has retained a powerful symbolic significance within the global financial architecture. It represents monetary discipline, a historical counterpoint to the potential for unlimited fiat currency issuance. It embodies long-term continuity, transcending political cycles and economic fluctuations. Furthermore, gold symbolizes independence from political issuance, offering a perceived hedge against governmental overreach or inflationary policies. This is precisely why gold continues to appear on central bank balance sheets worldwide, often in substantial quantities. It is not held as currency to be spent, but rather as a strategic reserve and a stabilizing reference asset. For financial analysts, gold's presence in these reserves signals a commitment to long-term stability and a recognition of its enduring value as a store of wealth, even in a fiat-dominated world. Silver occupies a more complex and dynamic position than gold in the fiat system. While it undeniably carries a rich monetary history, its modern relevance is significantly bolstered by its extensive industrial applications. Silver is a critical component in electronics, solar panels, medical devices, and numerous other high-tech industries, creating a robust demand profile independent of its monetary characteristics. In a fiat system, silver thus represents a fascinating confluence of historical money and vibrant economic activity. It acts as a bridge between purely monetary assets and real-world industrial demand. Its role is arguably less purely symbolic than gold's, but far more economically integrated due to its dual nature. For investors, understanding this dual demand, both as a precious metal and an industrial commodity, is key to analyzing its price movements and investment potential. It is equally important to be clear about what gold and silver do not represent in the current monetary paradigm. They are not a replacement for fiat systems. The global economy operates efficiently on fiat currencies. They are not a simplistic solution to economic complexity, nor do they guarantee against all monetary risks. While they can offer diversification, they are subject to their own market dynamics and volatility. Crucially, they are not alternatives to modern money in the sense of being a parallel currency system. Instead, they are complements in understanding the broader financial ecosystem. Viewing them through this analytical lens helps to temper unrealistic expectations and fosters a more nuanced appreciation of their actual utility within a sophisticated global economy. Gold and silver matter conceptually because they provide invaluable context for understanding our monetary system. They remind us that money has continuously evolved throughout history, from barter to commodity money, and now to fiat. They underscore that systems change, and that the stability of any currency ultimately relies on trust. These metals help anchor discussions about value without controlling economic outcomes. They offer a historical benchmark against which to measure the performance and stability of fiat currencies. For investors, economists, and the general public, this perspective is vital for developing a comprehensive understanding of monetary phenomena, including inflation, purchasing power, and economic cycles. When precious metals are viewed through this historical and conceptual lens, conversations become calmer, clearer, and more productive. The discourse moves beyond fear-mongering or urgent predictions of collapse. Instead, it transforms into an informed discussion about how money works, how it has worked before, and the various factors that influence its value and stability. This analytical approach fosters a deeper appreciation for the complexities of monetary policy and the interconnectedness of global finance. It equips individuals with the knowledge to critically evaluate economic commentary and make more informed decisions, whether as investors, policymakers, or engaged citizens. This series has explored critical topics such as inflation, money creation, purchasing power, and the enduring role of precious metals in modern systems. Our overarching goal was not to persuade or predict, but to explain, clearly, calmly, and historically. Gold and silver are neither mere relics of the past nor magical solutions for the future. They are, fundamentally, powerful reference points that help us understand the very nature of money itself. If this analytical exploration has deepened your understanding of gold, silver, and our monetary system, please like this video. Your engagement inspires us to create more informative and educational content. Share your thoughts in the comments below, What aspects of precious metals or fiat currency would you like us to analyze next? Subscribe to our channel for more in-depth economic commentary and investment analysis. Thank you once again for watching. We hope you have a blessed day.